Hello all. I'm sure you guys are doing great. And yes, yesterday we did part 1 of our Section A marathon session for the PM subject for your March 2026 exam attempts. And we did 40 questions live in the class. And I committed that 10 more you will get as a bonus bonanza. Today also we are targeting to solve 40 questions in the class and again 10 more for today. In total you will get a top 100 questions question bank from my side along with the solutions. To get access to it, guys, in the description you have a link towards my Telegram channel. Please join the channel and you will find it over there. Post the session today. Okay, also I know when we watch the videos we are in rush, so don't forget to like, subscribe my channel, and also please drop comments in the comment section. I mean, as a feedback for how did you find this video to be. And if you find it really helpful, then please do comment, because I'm just trying to help the students so that as much as the questions we can practice so that it can excel, it can help you in excelling the exams. Okay, all of you just quickly comment in the chat box. Am I audible properly? My video is clear. There is no problems with the videos and audios, so that when we start with the session, there has to be no breaks in between. Okay, quickly put your comments in the chat box. Is everything clear? Is everything audible? No challenges? Please put it. Okay. Okay, great. Thank you. Okay, now let's start with the session, guys. So, like yesterday, I would be giving you 2.5 minutes for the questions to try. Some questions you will be doing, some questions I'll be doing. Carry your calculator right now if you don't have it. Quickly grab it. I need calculator, pen and paper with you when you're solving the questions. Okay, so let's start solving it. Let's have the first question for today. And this is covering the complete syllabus, so don't ask me, ma'am, from where have you taken. It is from, I mean, the entire syllabus that I have taken it. Okay, now let's start with the first one. Yes, so the first question is on throughput accounting system. Now, the following production budget is for a company that makes two products A and B. The company's budgeted output and sales are restricted by a maximum number of 3,500 direct labor hours. So the bottleneck is 3,500 direct labor hours available in the budget period. Output and sales are given to you for product A and B. What is the company needing? See, this data which is there, like direct labor hours per unit, which is the bottleneck here. Budgeted direct material cost per unit, labor cost per unit, production overhead cost per unit, and sales price per unit. If the company were to use a throughput accounting system, what would be the TPAR, throughput accounting ratio, for product B to 2 decimal places you have to count? Okay, so you have to calculate TPAR for product B up to 2 decimal places. This being the first question, I'm solving it. Next one you will be doing. So look at my screen. You just have maximum 2.5 minutes, including question reading, to solve it in the exam. So we have taken around 20 seconds to read the question. Now let's use the maximum of 2 minutes and 20 seconds for solving. Okay. Now let's do it here. It only needs for product B, so I will not waste my time on product A. But one thing which is going to be general is the factory cost per hour, because TPAR formula is return per hour divided by factory cost per hour. Let's calculate for product B. What is the return per hour? Return will be selling price less material cost, which is 25 less 5, and this divided by per hour of bottleneck resource. Bottleneck resource is direct labor hours, and in 1 unit we require 0.25 direct labor hours. I'll divide it by 2.25 and I will get my throughput per hour. Okay, now let's divide it by the factory cost per hour. Factory cost is going to be total of direct labor and production overhead per unit, and this you will multiply it with number of units. So let's calculate it here. So this will be get the total cost, and just understand we don't calculate factory cost for product B only. Factory cost means cost of the entire factory. So get for product A as well as product B. And first get the total cost. Total cost is going to be for product A 8 plus 19.5 multiplied by number of units, which is 2000. So 8 plus 19.5 is 27.5, and here it will be 12. 27.5 multiplied by 2000 is 55,000. And product B will be 12 into 10,000 is 120,000. This divided by the total number of labor hours, which is given here 3,500. Now get the factory cost per hour. So it will be 1,20,000 plus 55,000 divided by 3,500. I get here 50. So I will divide this by 50. Let me just work out that. 25 minus 5 is 20 divided by 0.25. I get here 80. 80 by 50. So my TPAR is going to be 1.6 for product B. Clear? Common mistake done by the students is they will take factory cost also for product B. And remember, the fixed cost or the factory cost is for the entire factory, not just for the product. Clear? Okay. So those who are in the session, please try to do the second one. Okay. It is also on throughput accounting. If you're not able to do, don't worry, I'm there to solve it. The following data relates to a manufacturing company. At the beginning of August, there is no inventory. During August, there is 2000 units produced and 1750 are sold. That means 250 units are in stock. That is the inventory. The financial data is given to you: material, labor, variable overhead, fixed production overhead, variable selling cost, fixed selling cost, and total cost is given to you. The value of inventory you have to calculate on 31st August using a throughput accounting approach. So please do the calculations. A quick hint from my side that if you're calculating the inventory following the throughput accounting approach, remember what will be the cost here. Like when you do marginal costing, the relevant cost is variable cost. When you do absorption costing, the relevant cost is full cost. But when we do throughput accounting concept, which is the relevant cost here? Which is the cost that we assume to be variable, based on which you will value your inventory. So given you hint, quickly calculate and type it in the chat box. 2 minutes to you to solve, which I expect you to solve within 1 minute. Okay, your timer is started, guys. Quickly solve and tell me in the chat box what is your answer. I hope, Ramya, you're solving it. Only 2 minutes and try to give it to me in 1 minute. Your 1 minute is getting over. 1 more minute. Solve it quickly and tell me what is the value of inventory. Be quick. Anybody with the answer? Okay, let me solve it then. Yes, your time is almost going to be over, so let me solve it. See, in throughput accounting, the only variable cost that we consider is material cost. So when I'm valuing inventory, I will use that variable portion, or the only cost that we assume in throughput accounting is material cost, right? So therefore, please take the material cost 40,000. The number of units produced are 2,000. So what is cost per unit? Cost per unit will be 40,000 divided by 2,000, that will be 20. Now you need to get the inventory cost, so that will be 250 units are there in inventory, multiplied by 20, and you get here 5,000. So your answer is 5,000. Very simple, very easy. You just have to apply the normal basic concepts of throughput. Okay, let's go to the next one. Question 43. Which of the following environmental costs should not be included in an environmental cost budget? Should not be. That means which is that cost for which you will not budget for? Okay, guys, any of you having any queries, any doubts, you are free to ask me in the chat box. Any question that I am solving that you're finding it difficult, put it in the chat box and I will explain you that portion again. Okay, now, which of these costs should not be included? Cost of cleaning up the contaminated site, of course it is to be included. This is the main cost. Cost of using pollution prevention methods, to be included. Cost of fines for environmental contamination. Now when we prepare budget, for example, you are preparing budget for yourself. Do you include the cost of parking fines in your budget? No, because fines is something, or penalties is something that we don't provide for, right? It just happens and then you have to bear it. You never plan for fines and penalties. So definitely this is wrong, because cost of fines or for environmental contamination will not be a part of cost budget. So this is the correct statement. It will never be a part. Let's see the last one also. Cost of recycling the waste. Of course, it is to be a part because this is an environmental cost to be borne. Clear? Great. Let's move to the next one. A minute to you. Can you please answer this question? A minute only I will give you. Simple, straightforward, easy question. Which of the following environmental cost is an external environmental cost? External. License fees, payment of fines and charges, cost of monitoring the emissions, traffic congestion. Understand which is your environmental external cost. Type it in the chat box quickly. This is a confusing question. It's coming from your past papers and your CB exams. So tell me what is the answer. Quickly, type it in the chat box. You just have a minute to answer that. Which of the following is an environmental external cost? External environmental cost. Option A, B, C, D. Okay, so Ramya is given cost of monitoring emissions. No, Ramya, that's wrong. Because when you do a monitoring of emissions, this is an internal cost, no? Because the external cost means what? The cost of the cost which is like the pollution or any any water damage. I mean that has been released into the environment. So the cost is the cost that you are bearing because the environmental effect has been done and it has been released into the environment. Monitoring emissions is the detection cost. Why? Because anything that you monitor is you're trying to detect whether the pollution emissions have been done or not. Yes, very good. So it is a detection cost, right? So this is not the relevant cost because it is an internal cost, it is a detection cost. Payment of fines and charges and license fees. License fees is a fees that you bear like a prevention cost so that you obtain the license so that you don't have to bear the pollution cost. Okay. Traffic congestion is your external environment cost. Why? See, fines and charges are your external failure cost. When you fail to provide the environment for, the correct, the way that you should be releasing the gases in the environment, because of that failure the government charges fines and penalties. So it's an external failure cost. I asked you what is an external environment cost. That means that cost of releasing the resource, any factors which pollute your environment, which degrade your environment. So can I say traffic congestion? Because when you have traffic congestion, lot of pollution goes in, lot of vehicles are stuck at a place, lot of the petrol, diesel and all this get emitted at a particular place only. So therefore the pollution environment gets polluted a lot. So traffic congestion is the relevant cost here. Clear? I hope very clear. Let's go to the next one. Are the following statements about cost classifications true or false? Let's do this. Repairs under warranty are an external failure cost. Okay, repairs under warranty. So there is a product that has gone into repairs, right? And you being the company who has sold that product, and now you have to bear the repair cost. Is it an external failure cost? Of course, yes, because the sale has been made, customer has bought it, and now there are damages, and you have to bear it. So the product has already been released into the market, and now you are bearing it. So of course, it's an external failure cost. Lower selling price for sub quality product is an internal failure cost. Yes, because you are you are making the price for the goods, right? You are finalizing the price. You know that the quality of the good is low, so you're keeping the selling price also low to meet the connection between the selling price and the quality. So it is an internal failure cost, correct? Because you made low quality product, and now you don't have any option but to keep the price low. Right now you have not sold it in the market, but you are doing the pricing. And why you're doing a lower pricing? Because it was a failure at company's end. Clear? It's extremely important to understand internal failure, external failure, prevention, detection cost. The reason being environmental cost is sure going to be there in the exam. Okay, so I hope it is clear. Let's go to the next one. A product has the following cost: direct material, direct labor, variable overhead. Fixed overheads are 9,000 per month. Budgeted sales per month are 450 units to allow the product to break even. The markup, okay, we have to fill in the blanks. The markup which needs to be added to the marginal cost to allow the product to break even at the budgeted units. So you have to calculate the markup percentage. But for calculating markup, first I need to know my selling price, as the data given to me doesn't show the selling price. So you know that at break even point what happens? Your contribution is equal to fixed cost. It's a basic point. You know your fixed cost, you know the variable cost total. You can multiply this and we can equate to 2 to get the selling price. If you know the selling price, you can calculate the markup. Once you know the markup, you can calculate the percentage. Clear? Okay, let's do it. So if I say my contribution is equal to fixed cost, I don't know my contribution, but the total of variable cost is 15 plus 9, 24 plus 10, 34 and 40. So my contribution will be selling price less 40 multiplied by 450 units will be equal to fixed cost, which is 9,000. So now please do it. So one way is you open the brackets with 450, you take 450 here and divide it. That's very easy. Let's do it this way. So I can have selling price less 40 is equal to, when you divide 9,000 by 450, I think it's 20. Okay. So now I can say that selling price is equal to 60. Correct? When you solve this, you've got selling price is equal to 60. Your cost is 40. And let's get the markup. Now here also I can have the fixed cost. Fixed cost is 9,000. Okay, let's have the markup. Now the question says What is the markup needed to be added to marginal cost to allow the product to break even? So what is the markup that I need? Okay, please look at my screen. You know that this is the variable cost is 40 and I need to add to marginal cost only and not total cost. So no need to calculate fixed cost divided by number of units. If you are doing that, that's wrong because the markup is to be added to marginal cost. So I can say that 60 minus 40 will be my markup divided by 40 because I need the base to be marginal cost. Now this you multiply with 100. So how much you will get? 20 divided by 40 multiplied by 100, I get 50%. So that means my markup is 50% on the variable cost to get this. Clear? Okay, I hope you guys are clear. Now let's do the next one. Okay, give it a try. I will do the next one. And after this, one or two questions, then you will be doing also. Okay, now look at my screen. HD company manufactures 4 products, but I think Ramya, you can try this question. Okay, it's on break-even point. I hope you can try this. Just give it a try, otherwise I will do it. HD company manufactures 4 products. The unit cost, selling price, and bottleneck resources are given to you. Labor, assuming that labor is a unit variable cost, and if the budgeted units sale are in the ratio of 2 is to 3 is to 3 is to 4. So this is the ratio in which the products are sold. So if you have to calculate weighted average, you need these weights. And monthly fixed cost are budgeted to be 15,000. The number of units of W that would be sold per month at the budgeted break-even point will be nearest to what? So find out only for W. First step, can you type it in the chat box and tell me what is the break-even point considering the weighted average contribution? You have got the weights here. Use the weights. You can calculate contribution here. Do it and give me the answer for weighted average contribution. Okay, and give me what is the break-even point here. That is fixed cost by weighted average contribution per unit. Just type that in the chat box and what is to be done after that, I will tell you. So quickly, in 1.5 minutes, you have to type it. Okay, do it quickly. I've started my timer here. Only 1.5 minutes I can give you. Ramya, are you trying? Calculate the weighted average contribution and divide it by the break-even point, divided by the fixed cost. If you can give me that answer quickly, 30 seconds more. Okay, now I think it's good that I solve it. Okay, so look at my screen. First step is to get the weighted average contribution. So weighted average contribution will be, let's get the contribution per unit here, sales less material cost, labor cost and variable overhead. When you reduce it, your contribution will be 56 minus 22 minus 15 minus 12. I get here 7. Here my contribution will be 67 minus 31 minus 20 minus 15. I get here 1. Here my contribution will be 89 minus 38 minus 18 minus 18. So it is getting 15 here. Right here I am getting 15. Okay, the next one 96 minus 46 minus 24 minus 15. I get here 11. So I am getting the contribution here 11 and here how much I said? I think here it was 1. Okay, I'm sorry. Here it was 1, here it was 50. Right. Okay. So now let's just solve it. So we have got the contribution. Let's apply the weights and weighted average contribution will be 7 multiplied by 2. The weight of W is 2 plus 1 multiplied by 3 plus 15 multiplied by 3 plus 4 multiplied by 11. So we get here 14 plus 3 plus 45 and plus 44. I get here 106. So I am getting the weighted average contribution as 106. Now let's calculate the break-even point. So here my break-even point will be fixed cost is 15,000 divided by 106 and I get here 141.5. Now I need for W. For W I will have to multiply 2 because 2 is the weight here, correct? So for W it will be 141.5 multiplied by 2 and I get here 283. So my answer is 283 units. I hope Ramya you're getting the clarity that you need. Okay, let's move on to the next one. So this is a good question on external financing. Let's try this. The following draft annual budget has been prepared for the machining room of a production center. The machining room makes 4 components which are then transferred to an assembly and fitting department. The variable cost, fixed cost, hours per unit, cost of buying from external supplier is given to you and budgeted production units are also given to you. The machining room has a maximum capacity of 24,000 hours per year. This is the maximum capacity. But any quantity of any of the components can be purchased from an external supplier if required. It is essential that the budgeted quantities of all 4 components be delivered to the assembly and fitting department. This means that some of the budgeted requirements for components will have to be purchased externally. So that means we will have to make external purchases. Okay. Now, in order to optimize the financial return, which component should be purchased externally? What is the way to understand which component to be purchased externally? We compare between the external price and the variable cost of manufacturing. Okay. So please look here. We have W, X, Y and Z and let's calculate their external price. External price is, for it is 60, 46, 24, 48. 60, 46, 24, 48. Now compare it with the variable cost and you get here per unit 20, 15, 8 and 15, right? So in total you can find the what is the extra cost, because in all the cases I think we have extra cost only, variable cost is less only. Okay, extra cost here is 40, here is 31, here is 16, and here is 33. Clear? So we have got this extra cost, 48 minus this is 33. So I've got extra cost here. Now, you can see that the question says hours per unit 3, 2, 1 and 1.5. So if we make these products, externally, if we outsource them to an external supplier, then these hours will be saved, correct? So I can write here hours saved. Here hours saved are 3, 2, 1, 1.5. Why we are doing it? Because we want to know the product that is giving you the least cost per hour. That is the one that we will externally outsource, because that is going to be the cheapest for the company. See, all of the products are having extra cost. No, none of them are straightforwardly giving you savings. So we need to find this way to find out which product should we externally outsource. The one that gives you lower cost or the lowest cost per hour. Clear? Okay, so let's get the cost per hour. Here it will be 40 divided by 3. So that gives me 13.3. 31 divided by 2 gives me 15.5. This gives me 16, and 33 divided by 1.5 gives me 22. Now please do the ranking. When we do the ranking, the lowest cost per hour is for product W, second is product X, third is product Y, and fourth is product Z. Now, which product should be then purchased externally in the case when you really require to purchase is the one that costs least to the company, and which is the one costing least? Product W. So the product that will be purchased externally will be component W. Clear? Easy? I hope you got the way of how to solve these questions. Let's go to the next one, 49th one. Very interesting question and very easy, but yes, it is a very good question. Let's look here. A company makes two products X and Y with the same machines and same direct labor force. Same. The following information is available for the next budget period: labor hours per unit, machine hours per unit. During the period, there will be a maximum of 20,000 machine hours and 48,000 direct labor hours available. So which are the constraints here? 20,000 machine hour and 48,000 direct labor hour. Can I make the constant equation? Yes. For 20,000 machine hours are this, and this is labor hours. Okay. Students' mistake. Okay, yes, Ramya, I will answer your query. Why we are only comparing variable cost? Because when we do a make or buy case, just understand fixed cost will always be incurred, right? Whether you make the product in-house or you make it outside, unless question tells you that there is a specific fixed cost. So whether you make 4 products in-house or you make 2 products or you make 10 products, that fixed cost will be allocated between the products, correct? So that fixed cost is never my deciding factor. Then what is the deciding factor? Variable cost. Because if you don't make the product in-house, then what is the cost that you are saving? Variable cost. Hence, for decision making, we always compare between the outsourced price and the variable cost. I hope now it gives you clarity. Okay. Now coming to this point, so now 20,000 is the machine hours and 48,000 are the labor hours. Common mistake by the students, they always link in their mind 20,000 towards labor hours and 48,000 toward machine hours because it is written in that sequence. So don't make that mistake. Please read it carefully. Okay. Ramya, I think I was able to clarify it. Yeah. So what are the two constant equations that you will create? First, let's create for labor hours. So we will have 0.6x plus 0.5y is less than equal to 48,000. Next, for machine hours, 0.3x plus 0.2y is less than equal to 20,000. Okay. Now, let's find out. Now, the question is asking, let's see the question requirement. If linear programming is used to determine the optimum production quantities of product X and Y, and we just have two equations, of course, your answer will fall in these two constraints intersection only. So probably these will be the only one that is binding constraints. Now, and these resources could be limiting factor on output and sales. I'm sorry. Which of the following would be a constraint in the linear programming model? Just find out which of these two are there, because that is the one that is going to be the constraint. 0.3x plus 0.2y is less than equal to 48,000, wrong. 0.5 plus 0.22 is wrong. 0.6 plus 0.3 is wrong. 0.6 plus 0.5 is less than equal to 48,000 is correct. So that means correct formulation of equation is also needed. Okay. Don't make them intergroup. Always make one group equation one side, another group equation another side. Okay. Okay, let's go to the next one. Question 50. ABC company makes 3 products. Budgeted information is as follows. Okay, these products are there. Material A is in short supply and ABC only has 10,000 kg of material available. So that's in short supply. So here, yes, absolutely correct, Ramya. Very good, correct answer. Good. Okay. Now, so here material A costs 10 per kg. So that means here what is the what is the constraint here? The constraint here is the material, right? The material in quantity is the constraint. So we will do every calculation, that is contribution per unit, then we will divide it by the kgs and get the contribution per kg, get the ranking, and then we will create the plan, normally like we do in a normal constraint equation. The same way we are going to do here. Okay, same way, no approach change. Okay, so let's calculate the contribution. A, B, C. Contribution per unit. So here we have selling price, material, labor. Reduce them and get the contribution. 50 minus 25 and 35, it will give me 15. Right? 50 minus 15 give me 50 minus 35 gives me 15. And here I will get 30 plus 13, 43. 68 minus 43 is 25. And here I will have 94 minus 55. So I get here 39. Now I've got contribution per unit. You need to take the scarce resource, which is kgs here. So what is kg per unit? So that I don't have, material A cost is given to you per unit is 20 and it says material A cost 10 per kg. So how much is kgs for material A then? 2. Cost is 10 per kg, 20 is the cost per unit. So kg here needed is 2. Let's see for material B, what is the kg? 30 divided by 10, 3. And for material C, it is 40 divided by 10, 4. 2, 3, 4. So 2, 3, 4. Now get contribution per scarce resource. For C it is 29. Wait, let me see. Have I done wrong maths? 94 less 40 less 10 and less 15. Okay, I'm sorry. I did wrong maths. Thank you for the correction. Yes, it is 29. Okay. Okay, so now calculate contribution per kg. And we have 15 divided by 2, 7.5. 25 divided by 3, 8.33. 29 divided by 4, we get here 7.25. Now give the rank. So rank 1, 2 and 3. Right, now let's prepare the production plan. So production plan will be, first we will make completely rank 1, which is 2000 units of product B. Right, so let's make the complete 2000 units of product B. These are units and these are kgs. How much kgs product B will require? 1 unit requires 3 kgs. 3 into 6, 6000 kgs are gone here. Okay, also one hint to solve the answer. Even if you don't solve it completely, where do you find, in which option do you find B is equal to 2000 units? I find B is equal to 2000 units in A, B, C. Three options. Okay, so one is eradicated. Now let's do the second one. Second rank is A. Can we make A completely? Yes, we can make A completely. 1000 units. Each unit requires 2 kgs. So we have 2000 kgs here. 2 plus 6 is 8. So which option we have? A is equal to 1000. This. So that means your answer is either C or D. So I'm just removing it. Correct? Now let's D for the third one. Which are the remaining kgs? 8000 kgs are gone. Total available is only 10,000 as mentioned here. So here we can have maximum 2000 kgs. 1 kg require 4. 4 kgs are needed to make 1 unit. So how many units we can make from it? 2000 divided by 4, that gives me 500 units. So which is the option with 500 is equal to C? Third. So my correct answer is C. Clear? Let's go to the next one. But let's do question number 51. Now direct material, direct labor, variable overhead is given to you here. And this is a kind of question. This is the markup one. So Ramya, you remember we did the markup question where first step I calculated selling price by equating contribution and fixed cost. Then next step we reduced selling price and marginal cost and got the markup. So this is almost exactly the same question. Please solve it. I will just discuss it here again. Direct material, direct labor, variable overheads are given to you. Total variable cost is 18 plus 4, 22. Fixed overheads are 15,000 per month. Budgeted sales per unit are 500. You can use it to calculate selling price per unit. What is the markup which needs to be added to the marginal cost? So over and above this marginal cost and the difference between sales is your markup, and that you take as a percentage of marginal cost only. So can you tell me the percentage for markup? Yes, you were correct for the last one, C. Good, very good. Tell me the percentage for markup, please. Do it quickly. Calculate the selling price and then calculate the markup and calculate the percentage on the variable cost. Marginal cost is the variable cost. I know you can do it. Just take 1.5 minutes more, but do it quickly on the calculator. You've got 50%. Let's verify it. No, the markup is coming as 136%. In the last question, we had answer as 50%. But here the markup is not 50%, it's 136%. Okay, can you tell me what was the selling price that you calculated? What is the selling price that you're getting? Just tell me the selling price that you're getting. 52, very good, you are correct. So markup is wrong that you have calculated, my friend. Now just see what is the markup. 52 less 22, which is 30. Now equate it, 30 divided by 22, because we need markup and markup is always on cost. That means your base will be cost, not selling price. So you'll do 30 divided by 22 multiplied by 100 and you will get here 136.36%. Clear? So your answer is 136.36%. Right? I hope I'm clear. Right? So very silly mistake, but that's okay. You will learn by your mistakes only. Okay, now the next one. Question number 52. Very interesting question. When is a market penetration pricing policy more appropriate? Say market penetration. Market penetration means that it is that policy where you want to get, with a small price change, especially when you lower the price, you want to get a higher quantity. So your demand is what going to be? There are two things only. Either demand is elastic or inelastic. Inelastic means with the change in price, your demand is not really changed. Elastic is with a small change in price, also demand changes rapidly. So let's talk about that. You have, in the case like Geo, right? So when the price is reduced, demand changed rapidly and it almost grabbed the market. Clear? So here the question is very simple. What is the market penetration? When is a market penetration policy more appropriate? If a product is new and different, definitely not. Then market skimming is there. Because if a product is different, then you can ask the price whatever you want to. Correct? So then you would go for a market skimming policy. If the demand is highly elastic, yes, as we discussed, so it is definitely when the demand is highly elastic. If the demand is highly inelastic, no, because then a change in price will not bring a change in demand. So that is not correct here. If there is no possibility of economies of scale, so how will you penetrate into the market? Penetration means you want more quantities at a lower price. Okay, clear? Let's go to the next one. A company uses its direct labor force to make a product for which the sales price and unit cost are given to you. Sales price is 80 and material, labor, variable overhead. This is for 2 hours and 2 hours given to you. The workforce is operating at full capacity and it is not possible to obtain any additional labor hours in the near future. Opportunity cost, remember? A customer has asked the company to perform a special job that would require 20 hours of direct labor time. 20 hours. Now, what would be the relevant cost of diverting the labor from its existing work to perform the special job for the customer? So, what is the relevant cost for diverting the labor? Let's do it. Let's calculate it. What is going to be the relevant cost? Relevant cost will include what is the normal cost that you're paying to the labor per hour, right? What is the relevant cost would be, what is the rate of labor that you require per hour? So the normal rate is 20 divided by 2, which is 10, right? Which is 10. This is the normal rate that we are paying to the labor, 20 for 2 hours. So for 1 hour, it is 10. Now with this, I will add. What you will add? Variable overhead is also there, right? Variable overhead. Because that is also going to be bearing here. Per hour will be 4 divided by 2, which is going to be 2. So variable overhead will be 2. Yes, absolutely correct, Ramya. So variable overhead will be 2. Normal labor rate will be 2. Why have I taken variable overhead? Because it is dependent on the labor cost. So these two are the variable cost here. Clear? Now, with this, let's add the opportunity cost. What is the opportunity cost? Is the contribution lost. So, what is the lost contribution per hour? Let's calculate. Selling price is 80, material is 10, labor hours is 20, and variable cost is 4. What is the total here? 34. So, what is the lost contribution? 80 minus 34, 46. 46 is when you have 2 labor hours. So what is the cost per labor hour? 46 by 2, which is 23. Now you add everything and you will get your relevant cost. 12 plus 23, 35, and this is for 1 hour. We require 20 hours. So the total relevant cost will be 35 multiplied by 20, which is 700. So the answer is 700. Clear? Simple and easy. What you said exactly, that is what we did here. Okay, great. Let's go to the next one. Let's do question number 54. Jackson Company produces 3 products. Sales price is given to you, material cost is given to you, and labor cost is given to you. This is on material in-house. I think this one you can do it because this is, or let me do it only. Okay, now sales price, material cost, labor cost, and demand is given to you. That is for the number of units. Labor is restricted to 1,20,000 hours, and in order to meet demand, Jetson is considering using a subcontractor to produce the products that cannot be produced in-house due to the restriction on labor hours. Exactly a similar question we have done. The subcontractors provided the following code for George, Elroy, and Jane. The subcontractor price is given. So calculate the number of units George that will be manufactured in-house. So for that, first we have to see which will be made in-house and which will be outsourced. So let's calculate for George, Elroy, and Jane. What is the external price? Is 55, 66, and 82. Compare it with the variable cost. Okay, just like we've done in the earlier question. Variable cost is material cost and labor cost, these two. So variable cost here is 15 plus 33, 48, 57, and 70. Okay, now let's reduce it and get the extra cost or the saving, like that we do normally. So I think it's everywhere savings only. Everywhere the variable cost is less. So it's not saving, it's extra cost. Sorry. Extra cost here is 7. Here it is 9. And here it is 8. No, not 8. 12, right? 82 minus 70 is 12. Right, we have got the extra cost for 1 unit because as per the information which is given to us. Now the same way, we have restriction of labor hours, get the cost per labor hour. So labor hours are here. We don't know the labor hour, we have to calculate. So divide by 6. Okay, 33 by 6. It is 5.5. Here it will be 27 by 6. 4.5. Here it is 48 by 6. You get 8. Right? So we have got the labor hour 4.5, 5.5, 4.5, and 8. This is the labor hours required per unit. Now get the cost per hour. So just divide it. 7 divided by 5.5. That is 1.27. Then E divided by, that is 9 divided by 4.5, we get 2. Then 12 divided by 8, we get here 1.5. So let's do the rankings. That is, which product is giving me the least cost, only that product we will outsource, otherwise will not. So that it gives the least cost to the company, correct? Now, this is rank 1, this is rank 2, and this is rank 3. I hope it is clear till this point. So it's better that we outsource. No, but the question, wait, the question is which units of George will be manufactured in-house? So how many units of George will be manufactured in-house? First, That means we'll do the ranking in reverse now, right? So now just look at this ranking. This is the ranking from the point of view of external cost, the ones that we are going to outsource. That means we'll do reverse. So we will first make full LROI in-house, right? Because it has got the maximum cost if you outsource it. So when you make it in-house, what is the maximum units that you will make here? So the same way, units and hours. We can make maximum LROI of 8,000 units here. And each unit requires 4.5 hours. So 8,000 into 4.5 gives me 36,000 hours. And we have total 1,20,000 hours available. Okay. Next, we will make Jane completely. So Jane is 9,000 to be made in-house only because it is expensive to outsource it. And each unit of Jane requires 8 hours. That means 72,000 hours. 72,000 plus 36 gives me 1,08,000. How many hours I'm left with? 12,000 only. And here each unit requires 5.5 hours. This divided by 5.5, that means we can make in-house 2182 units only of George. Rest all the units we need to outsource it, right? Because the capacity of labor is completely over. So 2182 or 2181.8, which gives me the second as the correct answer. So like in the last question, we had the question based on outsourcing. So somehow it remained in my mind, and only when I observed the question is asking for manufacturing in-house, only then it got clicked. Otherwise, we would have got wrong answer. Correct? We would have selected 7819 then. Because when you reduce 2181 from 10,000, you get 7819, and that would give you wrong answer. Okay? So yes, understanding of question is very important, and reading also. Okay, let's go to the next one. So now these are the questions based on quantitative techniques. That is your minimax, regret, yeah, and your maximum. All those questions we are going to take up now. The following payoff table shows the monthly contribution that would be earned from each of the four mutually exclusive options, option A to D. Yesterday also we have covered a lot of questions on this approach. Let's try to revise it and recap it. Given three different outcome situations, it is not possible to predict or estimate the probability of each outcome scenario. Option A, option B, option C, option D is given. If the choice of option is made on the basis of minimax regret, which option will be selected? Now look here guys, you know that when we have to choose the options like this, because you are choosing options, so you are going vertically, right? You will calculate regret then horizontally. Because your decision making is vertically, so you need to calculate regret horizontally. Let's calculate the regrets here. Now when I look at horizontally here, which is the maximum payoff, we'll go ahead with 40,000. So here if I go ahead with this option, there is no regret. However, if I'm not going ahead with this option, and if I go with first option, I'm losing notionally 8,000. Here I'm using 40 minus 25, 15,000. Here I'm losing 40 minus 22, 18,000. In the second row, we are going ahead with this as the best option. So here I'm losing 40,000. Here I'm losing 30,000. And here I'm losing 20,000. Now when I go ahead with the last one, this is the best one. I will take this and I will have no regrets at 75,000. Okay. Now you will go ahead with the next one, and that will be at 38,000. Just 1 minute. Sorry, I had to just fix my mic. Okay, let's go to the next one. Sorry, this one only, right? So we are at 38,000. My regret will be 75 minus 38, 37,000. Here my regret will be 25,000, and here my regret will be 75 less 52, 23,000. Right? When you go ahead with these regrets, so then Now, what is the next step? Read the minimax regret from right to left and solve it like that. Always all the minimax, maximax, maximin, everything you read from right to left to solve, and which will make your life very easy. So look here, first I will calculate what is the maximum regret under each of the options. So from option A, what is the maximum regret? 30,000. Option B, maximum regret 40,000. Option C, maximum regret 25,000. And option D, maximum regret is 23,000. Next step, get the minimum of that maximum regrets, because we want to reduce the minimize the regrets, right? So the minimized regret would be, here it is, which is the minimum, the least, 23,000. So our option is option D, the correct answer. Clear? Okay, let's take one more and let's do this question on the company chooses from 4 mutually exclusive investment projects. The return on the project will depend on market conditions. The table below details the returns for each possible outcome. Option A, B, C, and D. You have poor, average, and good. The company applies maxi-min rule. It will invest into what? Maxi-min. That means go from right to left, get the minimum of all the returns under each options. Minimum returns. Under A, the minimum return is 4 lakhs. Under B, the minimum return is 3 lakhs. C, the minimum return is 450,000. D, the minimum return is 360,000. Which is the maximum of these minimum returns, because a risk averse person wants to maximize the minimum returns. So maximum of them is 450,000. Hence we will go ahead with option C. Right? Clear? Easy? Simple? Okay, let's go ahead with the next one. Okay, now let's go ahead with question number 57. We've done 56. Let's go ahead with 57. Okay, are the following statements true about the budgeting? Are they true or false? Very important, because these are the kind of questions that you will generally get in the exam, and these are from exam. Your kind of the papers that are set for examination purposes. Okay, let's look at the first one. It says that incremental budget is a budget which is designed to change as the volume of output changes. Do we have incremental budget like that? As the volume of output changes, do we change the budget? No, that's a flexible budget. Incremental budget is a budget that on the current year base, it just increments the figures. So this is false. Zero-based budgeting is used to compare the incremental cost and the related benefits of activities. True, because we compare that whether it is beneficial to go with this cost or not. So we analyze the cost from scratch, and that is the role of zero-based budgeting. Hence it is true. Clear? Understanding of concepts is essential to answer these theory questions. Let's look at the next one. Which two of the following are characteristics of the feedback in the context of control? Okay, let's see which two of the following are characteristics of feedback in the context of control. First, it is used mainly for planning purposes. It is secondary data. It comes from internal sources within the organization. It may consist of both financial and the non-financial information. Okay, which two you do think are the characteristics of feedback? Okay, in case of the control that we have covered in the syllabus already. So which two are the characteristics? Number one, it is used mainly for planning purpose. No, it is used for control purpose. It is a secondary data. It's more like a combination of primary and secondary data. I think it's more of a primary data. Primary data is the data that you collect first hand, right? So it's more of a primary data. It comes from internal sources within the organization. Yes, you do feedbacks based on the prior experiences and the data that you have. It may consist of both financial and non-financial information. Of course, it covers both the information. So these two are the correct options. Clear? I hope it is clear to everybody. Okay, now the next one. A budget that is continuously updated by adding a further accounting period. Can you tell the answer, Ramya? It's very easy. A budget that is continuously updated by adding a further accounting period, which can be a month or a quarter, when the earlier accounting period has expired, is known as a zero-based budgeting, rolling budget, periodic budget, or flexible budget. Try to answer it. Absolutely correct. Good. Good. Let's do the next one. Question number 16. The total cost of production for two levels of activity is as follows. That means it is on a high-low method. We have two levels given. The variable production cost per unit and the total fixed production cost both remain constant in the range of activity shown. What is the level of fixed cost? Can you calculate and tell me? Simple question. I think it's 1 or 2 minutes. That's okay, Ramya. I'm getting your answers. Don't worry. Okay, no need to type it again. So calculate the level of fixed cost. Apply the high-low method. And sometimes the simplest topics we skip. So I hope that you guys are not skipping this topic. I need the wave fixed cost. The question is for fixed cost. So you do your calculations and tell me what is the fixed cost. Calculate quickly. Tell me what is the fixed cost. You have got variable cost per unit correct. Put it in any of these production levels and calculate the fixed cost. Okay, I'll help you. So your variable cost is 1.25 per unit. Okay. Now if I put it in this production level, let's say, then what is the total variable cost here? 3000 into 1.25, that will give me 3750 is the variable cost. Your total cost is 6750. So what is the fixed cost? Reduce it 3000. Absolutely correct. But do it quickly. Okay. Yes. So it is correct 3000. Very good. You solve this and you get 2 on 2. Very good. Now do the next one. So it is based on learning curve. The first unit of an entirely new product is given here. Took 160 labor hours to make. The labor cost was 3200. 4 units have now been produced and it is thought that a 75% curve applies to the work. What would be the expected labor cost for 5th unit? So what you will do, you will calculate the labor cost for 5 units. Now, I don't think you're using the scientific calculator right now, and I have given a video already on my channel It's in the shorts where you'll find how to use on-screen scientific calculator in the exam. Because in my exams also I did the same thing. Okay, I used the on-screen calculator instead of carrying two calculators with me. Right now I will give you the figure of B so that you know the calculations then you can do later on with the calculator or on-screen calculator. B is log of 0.75 divided by log of 2, which is here negative 0.415. I have already written it with me, 0374. Now let's calculate what is the labor cost for fifth unit. How would you do it? Get the total cost for 5 units, reduce total cost for 4 units. Okay, let's do it. So for 5 units, my total cost will be 5 multiplied by y is equal to ax to the power bv2, right? So A is the time taken to do the first unit, which is 160 hours, right? So I will do it here. 5 multiplied by 160 multiplied by x is 5 to the power minus 0.4150374. Let's get the value here. Then for 4 units, we will do the same working. 4 into 160 multiplied by 4 to the power minus 0.4150374. Okay, now let's do the calculations and get the figure. I have got scientific calculator with me, so I'll use that and quickly do it. So for 5 units, I will take 5. First, I'll do 160 multiplied by 4 to the power minus 0.4150374. So I get the and multiply. I'll multiply it with 4. No, I'll multiply it with 5. You're doing for 5 units, right? I'll multiply it for 5. So I get here 410.196 hours. Okay, when I do it on calculator. On the same lines, let me just replace 5 with 4. I'll just correct and write 4. So, yes. So, I get the total hours needed to make 4 units and the total time needed is 360 hours. So what is the time to make the fifth unit? But you need the cost, not time, you need the cost, right? So time to make fifth unit is 410.196 less 360 hours. So that will be 410.196 less 360. It will be 50.196 hours, right? And the cost will be then, see, for 160 hours, the cost is 3200. So what is the cost for 50.96? 3200 divided by 160 multiplied by 50.196. Yes, this is easy way to do it. So let's calculate it. 3200 divided by 160 multiplied by 50.196. 50.196. Why it is not coming decimal? So it is giving me, wait, 50.196 multiplied by 3200 divided by 160. So I get here 1003.92 is the labor cost. 1003.92 is the labor cost where I find my answer here. 1004 approximate cost. Correct? I hope you are with me and it's absolutely sorted. Let's go to the next one. It's a theory one. Which of the following statements about standard costing is not correct? So these are the very favorite questions in your exam where they ask you not questions. And generally what we have a tendency to answer is which of the followings are correct. So students make mistakes here. So what is needed is the one, you read every point and always use the cross or plus signs here. You know, so that I think that remains things in the head. Okay, standard costing is, let's So which of the ones is not correct? That means first tick all those that you find are correct. Then automatically you will be left with something which is not correct. Okay, easy to answer. Okay, now standard costing is less applicable in a modern manufacturing environment where a large proportion of total cost are overhead costs that are fixed in the short term. Absolutely correct. It is less applicable because now we have overhead cost, which is a substantial portion and which is fixed in the short term. So standard costing is generally applicable where overhead cost is a minimum cost, and you have variable cost which are there. So it is because there we keep per unit constant, and in overheads keeping per unit constant is not possible. Hence standard costing is more relevant in situations where you have less of overhead cost. Okay, now the next one, manager expect to access up to date performance information. Managers are expect to access to access up to date performance information online, and standard costing systems do not easily provide it. They do not easily provide the up to date information. Yes, because they are based on I think they are based on the we always take the figures as per the original budget, right? So they are based on the figures that have already been predetermined, so they are not up to date with the changes. So yes, this is a pointer with standard costing for sure. Management may prefer alternative methods of performance reporting instead of standard costing. No, generally they don't. Okay, just give me a minute. Okay, sorry. Yes, so we have these two statements are correct in fact, and I want not correct. Management may prefer alternative methods of performance reporting instead of standard costing. Generally, no. Even today, the preferred method is standard costing only. So even though it has got flaws, but standard costing is the more preferred method. So yes, I think it is not correct. They still prefer standard costing. Managers, wait. No, I think it is correct. Sorry, my bad. With the flaws that they have, yes, they would go for alternative methods of performance reporting. Yes, we do have, right? We go for beyond budgeting and we go for other alternative methods of performance reporting rather than standard costing. So yes, this is also a correct point for standard costing. So looks like the last one is incorrect, but let's read it. Managers no longer rely on formal budgetary control reports to monitor performance. Now this is wrong. Managers still rely, we still prepare budgets for our organizations, the formal budget system. But along with this, we adopt other alternative methods also for performance evaluation. Right? Not just this, we adopt other alternative methods also. So therefore the last one is wrong. Okay, we will do till question number 80, and then the remaining 20 questions will be bonus bonanza for all of you to try at your own pace also. And let me remind you guys that will be available at my Telegram channel. So don't forget to join the channel, the link which is there in the description. And don't forget to like and subscribe to my channel so that the lot of videos that I'm going to come up with on different topics and different subjects, you should not be missing on that at all. Okay, so don't forget to like and subscribe the channel as well. Okay, so please let's go here. Which type of standard is most useful for monitoring the trends in performance over time? We have already discussed it, that when you're monitoring the trends, you are always going to be working with basic standard. Basic standard gives you the basic attainment that has to be there over the period, right? So when we're monitoring the trend, we'll always look to go for basic standards. This is the minimum that has to be achieved. Okay, let's go for question number 64. Spendthrift company purchased 6850 kg of material at a total cost of 32,195. The material price variance was 1370 adverse. the standard price per kg was, so you have to do a reverse kind of a calculation and get the standard price per kg. Let's do it. So material purchased is 6850 and the total cost is 32,195. Okay, so what is the wait, what is given to you here is material price variance. Material price variance is 1370 and this is the actual quantity. So can I say that actual cost less standard cost will give you the price variance? Open the formula. The price variance formula is standard cost multiplied by actual units less actual cost and gives you a material price variance. It is adverse, that means actual cost is more. So that means it is 32,195 less the standard cost, which is standard price multiplied by 6850 actual kgs, is giving me 1370. So let's solve it and get the standard price. So can I say that 32195 less 1370? So standard price will be 32195 less 1370, which is 30825 divided by 6850. So my standard price will be standard price will be 30825 divided by 685. That will be 5480. No, that's too what I've done. 30825 divided by 6850. I get here 4.5. So my standard price per kg is 4.5. Clear? I just opened the formula. And what is the formula for price variance? When it is adverse, that means your actual cost is more. So that is actual cost less standard cost multiplied by actual kgs, right? Because here we are taking the difference between the standard cost and the actual cost. Now to have more understanding and probably more clarity on the basic variances, guys, here again I have given a video for you. That video link I will insert in my description box. So please, if you want to access that, you can access the link there. In my description, I will add the video link for basic variances as well as I will add the video link for the on-screen calculator use. Please go through the same so that you have any questions and queries, it can easily be resolved over there. Okay? And you will have a better recap of the basic variances. Okay, let's do the next one. Question 65. It's again on variance. A standard unit of product. A standard unit of product contains two materials P and Q, and the standard direct material cost is given to you here, and the consumption is also given to you here. This is the standard cost also given. Okay. Management can control the mix of materials. So in standard costing variance reports, direct material variance are reported as mix and yield variance. Okay. In the period that just ended, 45,000 units of finished products were made. Actually, they use 6,900 kgs of material P, which cost 7 per kg. Actual 12,600 kgs of material Q. I don't need actual cost. I just need actual kgs. And only these two materials. What was the adverse direct material yield variance? Now, when you have yield, you will keep your mix constant, and that mix will be standard mix. What will change is only the quantities. Okay, remember this point and you will never be wrong. So I will have actual quantity in standard mix, standard quantity in standard mix, variance, then I will multiply with standard cost per kg, right? And then I will get the variance in total. Okay, now this is variance in kgs. Now we have two products here, P and Q. The total of actual quantity is given to you already. 6,900 is the actual mix. You need to make it in the standard mix. Don't forget that. So first get the total. The total is 6,900 plus 12,600. I get here 19,500. Here also, now here the total will change. So 19,500, put it in the ratio of 0.1 and 0.3. That is 1:3 ratio, right? So 19,500 divided by 4. 0.1 plus 0.3, you will do, let's make it 0.1 only. So 19,500 multiplied by 0.1 divided by 0.4, you get here 4875. 4875. Okay, I'm just putting it in the ratio of 1:3, that is divided by 4. So here in Q case, it will be 19,500 multiplied by 4 by 5. I get here 15,600. Oh, I'm sorry, I did wrong. 3 by 4 I have to do. 19,500 multiplied by 3 by 4, I get here 14,625. Now you need standard quantity and standard mix. Mix is already there, 0.1, 0.3. And you know the actual units just made were 45,000. For making actual units in total, how many kgs you need? 0.4. 0.4 kgs. So can we calculate what is the input needed to make 45,000 units? Right? So we would be requiring 45,000 multiplied by 0.4. We require 18,000 kgs. Yes, you are correct, Ramya. Very good. We require here 18,000 kgs. How I have calculated it? I have taken the actual quantities 45,000 divided multiplied by 0.4. Because each kg, each unit only requires 0.4 kgs. Right, so I've got here 18,000. Now you just allocate it in the ratio of standard mix 1 by 4. So 18,000 into 1 by 4, I get here 4,500 less. So 4,500 less 18,000 will give me 13,500 here. Now it is an adverse variance because actual quantity is more than the standard. Yes, right. So it is an adverse variance. So here you have variance in kgs, 4875 less 4,500, 375 adverse. And here also adverse, your actuals are more, 14,625 less 13,500. So I get here 1,125. Clear? Now you will multiply it with the standard cost per kg, 8 and 4 given here. Now get the variance. So your variance is 375 multiplied by 8, that is 3,000. And here your variance is 1,125 multiplied by 4, you get here 4,500. So what is the total adverse variance? 7,500 adverse. Clear? So your answer is here 7,500 adverse variance. Done. How much time am I taking? 2 minutes, 2.5, because that is the capping, and generally your questions are always formulated in a way that you can solve it in 2.5 minutes. What you need here is only conceptual clarity and practice at your end. Because I've practiced, over the time, so I can handle these questions. For you to handle, you also practice more and more, as much questions as you can. Okay, let's do question number 66. Okay, in the budget period that just ended, a very large adverse direct material usage variance has been reported. A very large adverse has been reported. Now what will you do? Control action should be taken because there's a large adverse material usage variance. Just pause a bit and just think, why would there be a large adverse material usage variance? Probably because we're using lower quality material, due to which more material is getting wasted in the production. And that is why, as per the standards, your actuals are being more, and actually you're using more materials than what was targeted for. Probably inferior quality is there. Okay. Which two of the following actions might help to improve the material usage variance? So with this thought in the mind, let's answer this. Alter the mix of materials to a cheaper mix. No, cheaper mix will mean more usage variance, more adverse variance, and probably more, Cheaper material will mean that it is going to further increase your adverse variance, right? So this is wrong. Reduce the sale price of the company's products, it won't really have any effect on the material usage variance. Switch to a higher quality material, definitely, because if you use good quality, less wastage and more better variance, favorable variance will be there. Give production staff some training, absolutely, because it may be that because of their mistakes, yes, absolutely correct, very good, Ramya, because of their mistakes the company is getting penalized because production staff is not able to better use the raw materials to convert them, right? There are some, so if we give them better training, maybe the some wastages can be reduced. Absolutely correct. Good. Let's go to question number 67. Okay, a company sells a single product. Budgeted and actual sales data for the period that just ended are as follows. Budget and actual data is given to you. So this is the variance on, I think, material share, market share variance. Do you remember market share and market size? So one of them is an operational variance and one of them is a planning variance. I will discuss it here. What is market share variance and what is, it's a planning or an operational variance. We will discuss it. I can even tell you now, market size is a planning variance, market share is an operational variance. Okay. Now, so you have the budgeted and the actual data given to you. The budget was based on an expectation that the company would maintain its 20% share in the market. It was subsequently recognized that the actual market size is only 90,000 units. So, and your share is 20%. It was therefore decided to report sales volume variance as a market share variance and a market size variance, right? Now, let's do the calculations here. So, what is going to be the revised budgeted figure? Revised budgeted figure will be 90,000. Yeah, so it is not sales volume. Sales volume has got subcategories, market share and market size, Ramya. Okay, we are doing one of them, and this is the classification as per the planning and operational variances. Okay, now, so the revised budgeted figure is 90,000 multiplied by 20% because market share is 20%. So 90,000 multiplied by 20% and I get here 18,000. Okay, this is my revised budgeted figure. My actuals are 17,000 units. So actuals are 17,000 units. Now what is the variance? Actual is less, 1,000 adverse. 1,000 adverse variance, and this you will multiply with the profit per unit. So profit is going to be, and we always take budgeted profit, right? Yes, very good, Ramya, correct, operational variance. Budgeted profit will be 50 minus 40, profit is 10 per unit. So you multiply it with 10 and you get here 10,000 adverse variance. Because we always multiply with standard profits only, right? Now, yes, it's not 6,000, it's 10,000, no? How come 6,000? Are you clear how 10,000? See, 90,000 is the market size. Market share of the entity is 20%. Yes, you are correct, 10,000. So here, what is my answer for market share variance? 10,000 adverse. Is it controllable or not controllable? If it is a planning variance, then it is not controllable. If it is operational variance, then it is controllable because it is within the limits. Okay. So this is controllable. Operational variances are always controllable. Planning variances are not controllable. Clear? That's okay. Now I hope you got your error. We never take actual profits. We always take budgeted profits. Everywhere in variance, whether you take a cost or you take profits, everything we take budgeted cost per unit or budgeted profits per unit. We never take actuals. We only take actual quantities. Please follow the basic variances video once and you will get this clarity. That's okay. Do your mistakes and learn from them. Okay, let's go to the next one. Question number 68. Very good question it is. Okay, SG company budgeted that SG company budgeted that to make and sell 900 units of product M during September. The standard selling price is 27. At the beginning of September, a new competitor entered the market and SG company was forced to reduce the selling price in order to maintain the sales volume. By the end of September, 900 units have been sold at a total of 18,000. So what was the selling price here? Selling price per unit was 20, right? 20 per unit. In retrospect, it is decided that a realistic standard selling price for September, giving the extra competition, was 18. So this is my revised budgeted price and this is my original budgeted price. We have got every information. Question wants us to calculate planning variance. Planning means we will compare between the two budgeted price. So original budgeted price was 27. Revised budgeted price is 18. We have reduced it, so it's an adverse variance, right? We have reduced it, it's an adverse variance. 17 minus 8, 9 is the adverse variance multiplied by number of units are 900. So my adverse variance is going to be 8100. No need to calculate. Simple. So I hope now you can handle all the operational and the planning variances. Okay, let's look at the next one. Also very interesting question. Which of the following variances should a production manager be held responsible for? Material price and production manager, who has got nothing to do with price. He has got everything to do with usage. And he's a production manager. He's at operational level. Right? Very good, Ramya. You got it correct. So he is at operational level. So he has got nothing to do with planning also. Okay. So is he responsible for material price planning variance? Is he responsible for material price operational variance? No. Material usage planning variance? No, he's not a planner. He is an executor. So no. Material usage operational variance because he is doing operational activities. Great. Very good. Done. Let's go to the 70th question. So after this, 10 more. We'll do till question number 80 and remaining 20, you will be doing it. Okay, participation by staff in the budgeting process is often seen as an aid. Yes, absolutely correct. Very good, Ramya. Okay, and it is often seen as an aid to the creation of a realistic budget, the participation of the staff, and to the motivation of staff. However, there are limitations to the effectiveness of such participation. Which of the following illustrates one of these limitations? So which budget are we talking about here? Participative budgeting. Because we are making the staff to participate. Now here you simply have to select which are the limitations of a participative budgeting. Okay, let's do it here. So participation allows staff to buy into the budget, which is a good point. Staff suggestions may be ignored, leading to demotivation. Yes, this can definitely be there. Because if there are too many staff suggestions, there are chances that some of them may be ignored. If they're ignored, then the ones who gave, they may feel demotivated. But let's look at the other points also. Staff suggestions may be based on local knowledge, so it's a good point too. Budgetary slack can be built in by senior managers as well as staff. Budgetary slack would be a limitation here if it is built by staff, not by senior managers, because here we're talking about participative budgeting. So in participative budgeting, it will be it will make more sense if budgetary slack is made by staff. So this is partially wrong, hence we will not take it. So this is the major limitation of a participative budgeting, that the staff suggestions may be ignored. Good. Okay, let's do question number 71. Okay, which of the following statements about budgeting and motivation are true? Let's select them. Question number 71. A target is more motivating than no target at all. I think this is correct statement. If I give you a target, that's more motivating rather than not giving a target at all. The problem with the target is setting an appropriate degree of difficulty. Yes, absolutely. To find the correct level of target and the correct level of difficulty is very, very problematic point. Employees who are challenged tend to withdraw their commitment. employees who are challenged, they tend to withdraw their commitment. Why would they do it? No, not always. Only when we have the ideal standards. In that scenario, they would withdraw. Otherwise, they would be fulfilling it. So I think this is wrong. If we are giving them an attainable target, then it's something that they were really motivated towards to achieve. Only when we give an ideal standard, only then it becomes difficult to achieve, right? So I think not all the time the employees will be taking it in a negative way. Sometimes they will be taking it in a positive way also. So this is not entirely correct, hence I will cancel it off. Option 1 and 2 are correct, and which is the correct option here? 1 and 2. Okay. Let's go ahead with question 72. This is on balance scorecard, a very good question. Now, are the following statements about the balance scorecard performance reporting system true or false? Very good, Ramya, you are correct. Very good. There must be just one key performance indicators for each of the four perspectives of performance. Do we only need one key performance indicators? No, we can have multiple, so that's wrong. A performance target to reduce the amount of wastage in production would relate to innovation and learning perspective of the BSc. A performance target which is there to reduce the amount of wastage in production, it would lead to relate to innovation and learning perspective of the BSc. I don't think, because a performance target to reduce the wastage in production would be a part of internal business processes, right? For production, we will go for internal business processes. This is also false. Both are false. Let's go to question number 73. Match the following elements to the correct area performance in the building block model. Very good. Okay, now we have to see match the following for building block model Fitzgerald and Moon. Now, achievability, competitiveness, motivations, dimensions of performance, standards or reward. Motivation will go to rewards, right? Competitiveness is dimensions of performance. Achievability, we match it with the standards, right? That the standard should be achievable. So simple match the following here. Okay, let's go to question number 74th. A different type of question. Yes. But I think you have linked it wrong. Achievability is not with rewards. Competitiveness, we have correctly given dimensions. Achievability is with regard to targets, right? Standards. And rewards are for motivation. But that's very well tried, Ramya. Very well tried. Okay, let's go to the next one. A government department is responsible for monitoring the performance of schools, providing education for pupils aged between 11 to 18. There is a separate government department that sets, okay, that sets final examinations. Yeah, that's okay, because we are doing quick questions, so I know when you're reading it yourself you will not do this mistake. Okay, yes, that's okay. Now, there is a separate government department that sets final examination that help determine entry to university and support people's job applications. The head teachers at individual schools are responsible for teaching and submitting the selected peoples for these examinations. Okay, the head teachers. Okay, which of the following statements is valid in this context of the scenario? Let's read it. Poor performance in terms of financial indicators should be ignored if a school is performing well in non-financial terms. Let's keep it on hold. Let's take the next one. Non-financial performance indicators cannot be manipulated by school head teachers. They can definitely be manipulated and they can definitely have biasness towards their favorite child. It is generally valid to compare the pass rates of different schools in the final examinations. But in this context, no. Because all of them are getting the chances to make their pupil enter and clear the exam. So you are giving me 2 and 4. But then we just have to select one. So 2 is not the answer. We just have to select one and 2 is wrong. Because they can be manipulated, no? Like suppose head teacher likes me, head teacher will give my name to that government, the government department. So I think the fourth is correct, but let me see, I'm confused between 1 and 4. Non-financial indicators are more important than financial indicators in public sector. Yes, this is any time correct. In public sector, in NGOs, this is correct. Yes, Ramya, you are correct. Now let's go back to the first one. I need to understand why it is wrong. Poor performance in terms of financial indicators should be ignored. Well, actually, this is wrong. Yeah, because we have to take the mix and the balance of financial and the non-financial indicators terms. So this is wrong. Yes, very good, Ramya. You gave one of the option correct. Yes, but in exam, yes, you have to get everything correct, right? And here you just have to select one. The fourth is most appropriate. But very good. Let's go to question number 75th. The following information relates to an investment center, which is a separate product division in a large company. It's separate investment center means your focus is on ROI or RI. Investment related tools are ROI or RI. Let's solve it here. Okay, now net current assets, non-current assets, profit before depreciation. Depreciation is given to you here. The company's cost of capital is 10%. What is the appropriate measure of center's ROI? So you just have to calculate ROI. Ramya, would you like to try this question? Just give it a try. Remember the formula of ROI, profit before interest and tax, and divided by capital employed, that is net current assets. Okay, so that is net assets, not net current assets, net assets. Can you try this and give me the ROI, please? %16.7. Okay, you are giving me this. Let me work it out. So we take profit uh, before interest and tax only. So that means I will take profit after depreciation, because what we take before is only interest and tax, not before depreciation. So when I take the profit after depreciation, it will be 50,000 less 10,000. After means you will have to reduce it. This divided by net assets. Net assets means add the current assets as well as non-current assets. Net current assets, what does this mean? Net current assets, current assets less current liabilities, right? And non-current assets are non-current assets. In order to get capital employed, I need to add these both. So let me take a total of 60,000 plus 2,40,000 or 240,000. So I get here 40,000 divided by 300,000, which is equal to what? 13.3. Okay. What was the mistake that you did? How you got 16.7? Probably you took 50,000, right? Because when you take 50 divided by 3 lakhs. Yeah, you took 50. You took the profit before depreciation, not after depreciation. Remember that we only take profit before interest and tax. That means after depreciation. Yeah, it was a good point here, right? So your answer is not 16.7, it is 13.3, but well tried. Okay, let's go to the next one. There are two profit centers, A and B. Profit center A transfers a product. So it's on transfer pricing. Profit center A transfers a product to profit center B but could also sell the product in an external market at a price of 30. So it can sell the product at an external market of 30. The marginal cost of making the product in profit center A is 8 per unit and the full cost is 14 per unit. There would be a variable cost of 1 per unit for sales and distribution to customers in the external case market, but no such cost for internal transfer. That means when they're doing internal transfer, then this cost will be saved of 1. To avoid disputes between profit center managers, what should be the transfer price for the product? Now we don't have any other transfer price for B, and the question is also not saying that it is to be available at the to be available at the, there is no spare capacity and also we don't need opportunity cost concept here. To avoid disputes, the best price is to sell them at the selling price, market price. Market price is 30, but there is going to be one saving, $1 saving in the internal transfers. So the price that we would give here is 30 minus 21, 20, 30 minus 1, 29. Clear? Easy question, easy at market price. Okay, let's go to question number 77. A government body uses measures based on the 3 E's to measure value for money generated by a publicly funded hospital. Do consider, okay, now measure value of public funded hospital. It considers the most important performance measure to be cost per successfully treated patient. Cost per successfully treated patient. Now the moment you see cost, don't think it's economy. Look at the question. The question is cost per most successfully treated patient. So when I look at externality is not there, economy is not there, effectiveness would be the patients that are re-entering the hospital, the output. So this is also not there, it is efficiency. Because for labor also we check now what is the cost per labor hour for generating the output. So we are checking the efficiency levels. So here also we are checking the efficiency level of the hospital. What is the cost per successfully treated patient? That means we try at the pointer. The focus is on successfully treatment of patient. Focus. Successfully treatment means efficiency. So the more the successfully treated patients, more is the efficiency levels. So here the focus is not on cost but on efficiency levels. Clear? Very good. So the answer is efficiency. This was a very good question where there is a lot of confusion about efficiency and economy. Okay, let's look at question number 78. Which two of the following are most likely to be performance measures for a not-for-profit organizations? Efficient resource allocation, for sure, because they have resources. A return on investment and residual income, no, that is for a profit-making organization. Minimizing the cost of resources used, yes, for sure. Success measured against competition. For a not-for-profit organization, we don't have competitions. We have competitions for the profit-making organization. Pretty simple question. And this is from one of your CB papers only. But ROI and RI is wrong now, my friend. I hope you are clear, Ramya. We are looking for a not-for-profit organization. And how do you calculate ROI and RI? You need profit as the starting point. Not. Yes, you are correct. It is not. Very good. Very good. Very good. You are correct, Ramya. Perfect. Okay, let's look at question number 79. No, I will not take this. It's on sales mix. We have done material mix, right? So let's take another question. Yeah, I will take question number 80. And one more question I will take on opportunity cost under transfer pricing. Yeah, I got it, Ramya. Very good. Let's do question number 80 and one more question on transfer pricing opportunity cost. Okay, so please look here. A company makes a single product with the following data. To relate in relation to this data, which of the following statement is correct? So very good question. Let's see which of the data is correct. The margin of safety is 40%. For that, we have to calculate what is the break-even point in units. So break-even point in units, this is only one data, so we don't have weighted average to be done. Fixed cost is 4 multiplied by 30,000, 120,000. Divided by contribution per unit, which is 25 less 5, 7 and 3. When you add it, it becomes 15. So 25 minus 15, 10 per unit. Break-even point is 12,000. Your budgeted units are 30,000. So what is your margin of safety? 18,000. Difference, right? Now what is the margin of safety in percentage? It is 18,000 divided by 18,000 divided by budgeted units, which are 30,000, multiplied by 100. So that will be 60%. Your margin of safety is 60%. And here it is given as 40%, so the statement is wrong. Let's go to the next one. The CS ratio is 24%. Let's calculate what is the contribution per unit. So your CS ratio, let's calculate your CS ratio. Okay, contribution per unit is 10. Selling price per unit is 25. So which is equal to 10 divided by 25 multiplied by 100, 40%. So this statement is also wrong. It is not 24%. Now the next one, the volume of sales needed to make a profit of 2,70,000 is 45,000. So calculate the break-even point with target profit. Okay, now let's calculate the break-even point again. So here it will be 1,20,000 plus target profit is 45,000. No, plus 2,70,000. Target profit is 2,75,000. And this divided by contribution per unit. Just calculate what is the units that you are getting. So 2,70,000 plus 1,20,000 divided by 10. I get here 39,000. So here it is given 45,000. It is wrong. So automatically your answer D is correct. But let's verify it how. If budgeted sales increase to 40,000 units, then the budgeted profit will increase by 1 lakh. No, my contribution is 10 per unit. But what is the profit per unit? 6. So if your budgeted sales increase by 40,000, your profit will increase by 2,40,000. Right? No. But why it is correct then? Just a minute. Have I done something wrong? Let's see it. If your budgeted sales increase by 40,000, then your profit will increase by Oh, I'm sorry. Yes, it will be 1 lakh only. 100,000 only. Very good question. Why? Because fixed cost will remain constant only. So just look. If your budgeted sales increase to 40,000, so there is an increase by 10,000. Which means my contribution will increase by 10,000 into 10, which is 100,000. But your fixed cost will not increase only, no, because your fixed cost is constant. Fixed cost is based on the constant calculation. The fixed cost are fixed. They will not increase. Yeah, so very good. So it will increase by 1 lakh. Very good. See, I did also mistake. I took 6 per unit first. But that's wrong because your fixed cost will not vary with the number of units. Right? So here no variation will be there with the number of units. Your contribution simply increases by 100,000, which is going to increase your profits. Very good. So this is the correct answer. Very good, Ramya. Okay, let's just look at one last question which I want to take up on the opportunity cost. Just to know that transfer pricing. So I will just calculate this question. 84th and the last question for your section A marathons. And just one request, guys, after this, if you like this session, you think that this session was fruitful, please drop a comment in the comment section also of the video. So it will really help, in ensuring that the upcoming videos are even more fruitful. Okay. Yeah. So now let's look at this. Parent company has two divisions. Very interesting question. Division A has limited skill labor and is operating at full capacity. This indicates that it is at opportunity cost we are having. It has been asked to supply a different product X to Division B. Division B currently sources this product externally for 700 per unit. The same grade of materials and labor is used in both the products. Okay, the cost card for each product are shown below. Division B is currently sourcing it at 700 per unit. And here we have to calculate minimum transfer price. Minimum means from the selling division point of view, correct? So from the division point of view of division A, selling price is 600 here for product Y, and division A is making product Y. This is division A, this is division B. Okay, and direct material cost is 50, 280, and a portion fixed cost is 60. This is not to be considered, and 90. What is the opportunity cost approach to transfer pricing? With the opportunity cost approach to transfer pricing, what is the minimum transfer price that we will have? You know that for minimum transfer price, the formula that we take is the variable cost plus opportunity cost, the basic formula that we have been carrying always. So here the variable cost for division A is 200 plus 80, 280, right? Plus with this we will add lost contribution. Okay, with this we will add lost contribution. So lost contribution is how much? Okay, let's calculate lost contribution. So which is, why I don't have the selling price here? Let's see what is the labor hour needed. Okay, just give me 1 second. Yeah. Okay, I'm sorry, I just missed out. Yes, you are correct. 380. 100 plus 280, 700. Why would it take 700? No, no, no. We are okay. Let me just work it out quickly again. See, what we are doing is we are calculating what is the opportunity cost to transfer pricing and what is the minimum transfer price. Okay, what is the minimum transfer price? Minimum transfer price is from the division A point of view, and division A is right now making product Y, and it has been asked to supply a different product X. So when division A will supply different product X to division B, okay, when it will be asked to supply different product X to division B, what is the variable cost of product X? So ultimately, what will be my opportunity cost? Variable cost for product X plus lost contribution for product Y. Because if you're making product X and you're not making product Y, so you're losing for product X, right? Yes, right? You're losing for product Y, because if you're going for product X, then you're not making product Y. Now, what is the variable cost for product X? It is this cost, 270, right? 270 plus, because if we are going to manufacture product X, then we will have variable cost of product X, not product Y. Not 280, 270. Right? Because what, see, read the question. Right now, the division was making product Y, now it is thinking to make product X. So if it is making product X, then we need to take the variable cost of product X, correct? So I will take variable cost of product X, which is 270. Now with this, I will add lost contribution because you are not making product Y. So what is the contribution that you are losing? You are losing 600 minus 280. 320. But what do we multiply this? How do we calculate lost contribution? We calculate contribution per hour multiplied by the number of hours of lost contribution. Correct? Here I am taking the contribution lost per unit. So I need to multiply it with the difference of units between product Y and product X. How will you get it? So look here. The cost is 20 per hour. For product Y is using how many labor hours? See, ultimately we are just looking the difference between the hours. Here product Y is using 80 divided by 24 labor hours. Product X will use 120 divided by 26 labor hours. How much percentage is more? Because now we'll be using more labor hour. So we are losing even more contribution. 6 divided by 4. So that means this labor hour usage is 1.5 times. What does this mean? That 1.5 times you're using more labor for product X, in which time you would have made more of product Y. So you're losing more of product Y, correct? By how much? 320, which is the contribution for product Y, multiplied by 1.5 times. That is the difference between the labor hour of both the units. Always you will do this approach. Always. Okay? Always you will do this approach. Whenever you are doing an opportunity cost method to determine the minimum price, you will always adopt this approach of taking the contribution per unit or per hour of the product that you are no longer making, multiplied by the effect of difference between the labor hours. Because see, if you are using more hours for X, that means you would have made in that time more units of product Y. Like here, 1 unit requires 4 hours. In 6 hours, we would have made 1.5 units of Y. So when I'm doing the lost contribution, I cannot just take 1 unit of Y, right? Because in 6 hours, we are losing 1.5 units of Y. So what is the lost contribution then? The contribution lost is 320, which is the cost contribution per unit, multiplied by 1.5 times. So what is the total value? 270 plus 320 into 1.5, which is 480. So what is my this minimum price? 270 plus 480, which is 750. So minimum price is 750 only. If I take 750, you can see that the division B can procure it from their market externally at 700. So from the entity as a whole, it is beneficial if division B procures from the external market, as it is costing less than having the product transferred in-house. Right? I hope you all are absolutely crystal clear with what we did for section A marathon. We did 80 questions of section A live in the class yesterday and today combined. Don't forget to like and subscribe the channel, guys. And if you like the video, if you think that this content is really useful for you, it would be a very big a kind, support, and I think a very big motivation for me if you can drop your comments in the comment section. And please don't forget to join the Telegram link, which is there in my description, so that would help you to get access to these notes and the answers. The entire question bank of 100 questions and the answers is there on my Telegram channel. Please get it there today only. Thank you all. Now I am also planning to come up with one more surprise for all of you, for all the PM students. So, follow the channel, subscribe to it so that you get the updates sooner. Thank you guys. Study well, study hard. Bye bye.